There is a number you rarely hear on financial news networks. It isn't broadcast from the floor of the stock exchange. It is a brutal, simple, and undeniable fact. 90% of traders lose money. Let that sink in. 9 out of every 10 people who try to make a living or even just a little extra from the markets will fail. They will see their hard-earned capital disappear. This isn't a game of chance like a coin flip. It is a battlefield of discipline, and most arrive unprepared. The truth is, the market doesn't care about your hopes or dreams. It is an engine that runs on data. It runs on rules. It runs on human emotion. This statistic matters because it is a warning. It tells us that what most people are doing is wrong. It tells us that following the crowd often means following them right off a cliff. The 90% who lose are not unintelligent. They are doctors. They are engineers. They are small business owners. They are retirees. They are smart people. The reasons for failure are not a mystery. They are common, repeated errors rooted in human nature. The most common mistake is trading without a plan. A plan is your map. It defines exactly when you will enter a trade. It defines where you will take profits. It defines, most importantly, where you will cut your losses. Without a plan, you are just guessing. You are reacting to noise. Sarah, a graphic designer, bought stocks from headlines on her phone. She had no entry or exit strategy. Her account slowly bled out. A plan replaces emotion with logic. Most of the 90% lose because they never write one. Another fatal error is poor risk management. This is the big one. This is what wipes people out. Traders become convinced and risk too much. 20% of the account, 30% of the account, 50% of the account. This is not trading. It is gambling. Professionals risk a tiny fraction, usually 1 to 2%. They expect to be wrong often. By risking small, no single loss can knock them out. The 90% often suffer a death blow from one catastrophic trade. Then there is overtrading. The desire to always be in the action is powerful. New traders think more trades, more profits. The reality is the opposite. More trades mean more small losses and more commissions. Patience is a trader's greatest virtue. Wait for the perfect setup. The A+ trade. David traded every day. He felt he had to. Dozens of low-quality trades. His account was a downward roller coaster. The 10% who succeed trade less, but trade better. So, how do you escape the fate of the 90%? It begins with simple, concrete actions. First, you must write a trading plan. This is not optional. Get a notebook. Open a document. Write down your rules. What specific criteria must be met before you enter a trade? What is your price target for taking profits? What is the absolute price at which you will sell for a loss? This is your stop loss. Write it all down. A plan you can see and touch is real. It makes you accountable. Do not place another trade until this is done. Next, implement strict risk management. This is your shield. Never risk more than 1% to 2% of your capital on a single trade. Example, a $10,000 account, $100 to $200 max loss. Calculate your position size from that rule. Use a stop-loss order on every trade. This prevents blowing up your account. It guarantees survival. Stay in the game to learn. Learn to be patient. Create a personal checklist to fight overtrading. Your setup must meet every single criterion before risking money. This forces selectivity. I need to find a trade. Versus, I will wait for a great trade to come to me. Your goal is profit, not frequency. Reduce your trades by half. Trade only the best setups. Quality beats quantity. Start a trading journal today. After every trade, win. After every trade, lose. Record the details. Why did you enter? Why did you exit? What were you feeling? Take a screenshot of the chart. Review your journal weekly. Look for patterns. Are you repeating the same mistake? This is your data. This is your path to improvement. The market teaches. The journal helps you learn. The 90% lose because they ignore their own data. The journey from the 90% who lose to the 10% who win is not a sprint. It is a long, deliberate march. You can begin the slow, steady work of leaving the 90% behind.